Okay, good morning, everyone. I am David Calderon with the Orange County Small Business Development Center. And so today we are going to be talking about pre-qualifying for a loan. And so I just wanted to take a moment to thank all of you for joining us this Wednesday morning and taking some time to learn a little bit about us and just getting a better idea of some of the resources that the Orange County SBDC has to offer. So today we have an amazing guest, and I'll be sharing with you a little information about her. Her name is Jezebel. If Jezebel, if you'd like to just say a quick hello.
Hi, good morning, everybody.
And so let's go ahead and get started. I know that your time is very special to us, so we just want to go ahead and make sure we start out on time. If you do, just a couple of logistical matters to go over. If you by accident unmute yourselves, please try to mute yourself back. We will be giving ourselves some time to ask questions at the very end. If you have a specific question you want to ask at one point, just go ahead and at the very bottom of your screen, there should be a link there for you to click on the chat messaging feature. And you can ask your question there, and I will compile the questions and then go ahead and read them to Jezebel at the very end so that she has an opportunity to kind of answer all of your questions. So thank you so much once again for coming. So let's go ahead and get started. So just a really quick introduction about myself. My name is David Calderon. I've been working with the Orange County SBDC since 2012. I've worked in a variety of roles, and currently I am the interim director here. I've owned my own businesses, and I graduated from the University of California, Irvine, with experiences in psychology and sociology and business management. I've been working here at the SBDC for a number of years now in a variety of roles, and I'm very excited about some of the new directions that we're headed in, where there's going to be a lot of emphasis on providing resources online just to increase that accessibility to all of you and be able to provide a really great experience that's interactive with the Orange County Small Business Development Center. Today we were going to be hosted by Manal Risha, which is one of our consultants here at the Small Business Development Center. Unfortunately, she had a bit of a family emergency this morning and is unable to attend today. But she is just an excellent example of the immense amount of resources that are available to all of you here at the Orange County Small Business Development Center. She has an MBA in organizational leadership. She has owned her businesses for well over a decade and has been consulting with us for just about 7 years now. And so she's an amazing resource. Her expertise is in social media marketing, traditional marketing. She helps business with startups, access to capital. So she is an amazing resource and is just one of 6 consultants we have here that are ready to serve you. So at the very end, I'll be giving you some information about how you can reach out to us and set up an appointment so that we can get you going on your business and get the resources you need to either start one or grow your business. So let's go ahead and here are some of the resources that we provide. We do one-on-one consulting. The great part about it is that no cost to you. And our expertise lies in access to capital, international trade, and startups. We also do a number of workshops and seminars that you can access on our website. So I encourage you to do that just to kind of learn about some of the upcoming workshops and events that we have planned for all of you. We have a wonderful internet focused workshop coming up tonight. So if you are available, it'll be starting tonight at 6 p.m. And if you have any questions about that, I can answer that offline. And for today, I would like to encourage you to join our mailing list. You can text OCSBDC to 22828, and you can have, we'll go ahead and start sending you emails and keeping you updated about some of the things that's going on here at the Orange County SBDC. And you can also follow us on Facebook. We're pretty active there. We send a lot of resources and information about trends in entrepreneurship, resources for entrepreneurs that are looking to expand their businesses, connecting with some of our consultants, keeping you updated about some of the events that we're involved with and workshops and events that are occurring around the Orange County. So I encourage you to join us there. And so now let's go ahead and get started to the meat of today's webinar. We will be talking about qualifying for a business loan, and as I mentioned, our presenter Jezebel Jimenez from East West Bank is going to be leading that session today. She has well over 10 years of experience in the banking industry, and she is a wealth of information, and I want to encourage all of you to please ask her as many questions as possible. But what I'm going to do now is I'm going to let Jezebel share with you a little bit about her experience and some of the things that she's been doing in the banking industry and some of the resources that she has available to all of you. So without further ado, here is Jezebel Jimenez.
Thank you, David, for the introduction. And good morning, everyone. And thank you very much for making the time to be here. Just briefly about myself. I've been working in the banking industry for over 10 years. Started my career right out of college as the branch manager for Bank of America, where I was given the opportunity to manage one of the mass market banking centers in California. After that, I started working for HSBC, where I expanded my knowledge and experience as a manager with the emerging markets department. I also worked for a First Financial Credit Union as an operations and service manager, where I got to learn a lot of the programs and functions of credit unions, which are completely different than the banking centers for the most part. I'm currently working with East West Bank as a small business relationship manager, where I really enjoy assisting business owners to achieve their goal and their growing potential. And also, I had the opportunity to open my business and still running. Somebody else is running it, but I'm still part of my business as well. So I have that experience under my belt as a business owner also. And I graduated from the University of Laverne with a bachelor's degree in administration, and I have a minor in marketing. Further ado, like I said, this is our topic for today is pre-qualifying for a loan, either because you wish to open your own business or because you need working capital to grow your business. Lucky for us and lucky for everybody, those options are available. Basically, if you know what you need and where to go get them. Nowadays, we have about 120 actively banks offering SBA products. What makes a difference between one bank and another to you is really the type of service that you will get from each of them. And the difference for us as bankers that you make to us is how well prepared you are with your documents and if they have all the information that you need to apply for the loan. So in general, what we need is a package of information to be able to communicate with the bank. As a business owner, you will definitely need a package to be able to communicate with any of the bankers. Just to give you a general information, if you're an owner, 20% or more, we're going to look into your credit report. We're definitely going to look into your financial statements, the SBA Form 1919, and your personal tax returns. And like I said, we do offer lending for existing business and for those that are ready to start their business. So let me look at my work here. Okay, so basically what we're trying to do here is to understand if the person of the company soliciting the credit can really pay it back. It can pay it back at all. So now let's say that we have 3 applications for credit, and then we give the applications to the credit analyst to evaluate them. And he or she will determine if these applications can be approved or not. The credit analyst will base these decisions in 2 simple steps. The credit analyst will see if the applicant is subject to credit. It wants to know what's going on with their credit, if they have any delinquencies, if they're paying on time. And let me tell you that once you are subject to credit, if your credit is looking good and then you have the capacity to repay the loan, the person is subject to credit from $1,000 up to $5,000. We'll get into more information as to what makes the difference between qualifying for $1,000 and then qualifying for $5,000. So like I said, once someone is being subject to credit, it can get as much as money as they need to for the business. We'll go into more detail right now for the information. So let me look. Moving to the second one. So the credit analyst is going to look into your credit worthiness. They're going to see your credit report. They want to see that you don't have any late payments, that you probably haven't filed bankruptcy for the last 6 years, 7 years, 4 years. Every bank has different rules, so I'll tell you a little bit more about that as well. They also want to know if you have management experience. If you've been in the business for more than 2 years, is this something that you've been doing for a while and that you're actually going to stick to it? And they also want to see capital. They want to see how much money are you bringing into the business? How much money are you willing to put into your own business as well? Okay, and then we're going to move into the capacity to repay. They're going to look into your bank statements. They're going to look into your tax reports, and they're also going to look into collateral. They want to make sure that you have some information and you're able to pay the loan.
Jezebel. Seems we may have had just a little bit of a disconnect here. Can you just please give us 1 second? Sorry, everyone. There was a bit of a technical difficulty there. She's looking into it right now. If you can just give us 1 moment while we resolve the issue with her audio. 1 second, please.
Okay, can everyone hear me now? I'm so sorry. I don't know what happened.
Yeah,
David,
we can hear
you
you
hear
now.
me?
Yes,
okay,
we can.
thank you. Sorry about that. So I guess I don't know what was the last thing you heard. So
we're in the previous slide, I believe.
There?
Yeah, just about right there.
Okay, sorry about that again. Okay, so again, the credit analyst, what it's going to look into is if the applicant is subject to credit. With not going into too much detail, in general, like I said, a person that is subject to credit is subject to, from $1,000 to $5 million. Being subject to credit has not much to do with the amount that you are going to request, at least not yet, but it has a lot to do with the person or the business. Therefore, one of the most important things is credit report. So the credit report. The second important thing is the person has to have experience in the business, probably more than 2 years operating into the business, because it shows that that's something that you've been doing for a while and you're willing to stick to it and you do it well, versus someone that just woke up one morning wishing to be a baker and said, wait, I want to start baking cakes and I don't have any experience, but I can probably start doing it. So it doesn't really look very good to the credit analyst to give that opportunity to someone like that. It's not impossible, but it's important for the credit analyst to go ahead and do that, to look into that. Like I said, the credit, you have to be current. I mentioned there's over 120 banks that are willing to lend you the money. And just to let you know, not every single bank follows the same rules about, what credit score are they looking for. There's some banks that they will not accept you unless you have 740 score. Some other banks will not work with you unless you have 640. And some other banks will not care about your FICO score. As long as you don't have any delinquencies, any late payments, they will be willing to work with you. So that's one of the important things to look into it. Also, the capital. It's important that you have a little bit of your money invested in the business. You also don't want to. You also don't want to borrow more than you don't want to get into a debt that is too much. You don't want to be more in debt than what the business is worth. So let's move into the second section. I lost my train of thought just briefly. Historical repayment also, like I said, they're going to start looking into if you have bank statements, if you have your tax returns, and they're also going to look into a collateral. You can probably have a home, and some banks will use that as a collateral. Some banks will not. Some banks will not take collateral. They can work with you if you don't have a collateral. So I want to move into the next section. I want to say that I have 4 clients, so 4 applicants for credit, right? All of them have 660 on FICO score. All of them have 2 years or more of experience, and they have 20% collateral. The difference that we're going to start making the difference, once we have all this under control, all these people are definitely subject to credit. So what happens after is what the application process. This is what the credit analyst is going to start looking into more detail and see what type of loan we can give to this client. So the difference, what I was telling you, the perfect client will be a client or an applicant that is in category A. The client has credit score of 660 or more, 2 more years of experience, 20% of capital to put down for the business or for the loan to grow the business. It has great history of repayment. That means it has bank statements in order, tax returns in order, and it has a collateral. It probably has a business already that he owns, the building, or probably has a home. The second choice will be client B. Has 60 store, but this person doesn't have a collateral, but it does have tax returns in order. It shows everything that it's earning, and it's reflected on the tax returns. B and C, as you can see, they're very similar. The not ideal client or applicant will be client C, but it doesn't mean that client D cannot be client B within a year. And just to give you an example, there was someone that was working at a beauty salon, and she was renting a chair, but she wanted to open her own beauty salon. So what she did, she got her fictitious business name. She got help, obviously, from the SBDC in order to get the right documentation to open her own business. So she went and got a bank account. She filed her taxes for that year. And within a year, she moved from category D to category B because she was able to show the capacity to repayment. Like I said, she filed her tax returns. Yeah, she didn't have a collateral, but she looked a lot better for the credit analyst to give her the loan. And she also had a 20% down for her business. Her loan was a little bit smaller than average, but eventually she was able to open her own beauty salon. So it can be done. You can move from category D to category B within 1 year. And obviously, I'm giving you an example of a smaller scale. I'm not sure what kind of business do you want to open, or if you want to grow your business into a larger business. But it can be done. Like I said, the credit analyst is going to look into the opportunity or the repayment ability that you have. We go back into that section, the repayment capacity. Like I mentioned, they're going to check on your income. They're going to check on your personal and business. You want to make sure that you increase your income as much as possible. You want to report in your tax returns everything that you earn. Why? Because you're actually getting ready for that loan. You want to make sure that they see that you can pay that loan within whatever term is that you decide to get. They also want to make sure that your expenses, your personal expenses and your expenses in the business are kept to the minimum. If they see that you're making, you're earning $50,000 and you go and get a car that is $150,000, it's not really going to look well in your expenses report. It's not going to look that you're taking care of your money as you should. And also the loan amount. you probably need only $50,000, but I don't know why, you just decide to apply for 100. Why? Because, well, maybe they don't give me 100, but maybe they'll give me an over counter and they offer me 50. No, just make sure that you ask for exactly the amount that you need in combination with your business plan. And I'll show you an example of the reason why you have to be careful with how much money are you asking for. Okay. So now if you do have a business, or if you want to actually start a business, there's an opportunity also there. There's credit available for those people that are deciding to open their business without having to wait for a whole year. Let's say that you don't want to do what the lady that I just told you about the beauty salon. You actually want to start your business and you have the 30% equity for your business. That's where you go into the bank and you ask for a 70% loan for your business. And the debt to equity is the main driver, actually, at 2.33% between the 30,000 and the 70,000 that you're actually going to ask for. The debt to equity ratio, if it's lower than 3%, is definitely better, meaning that you have more money to put down for your business than a regular applicant. Let me go back to this page. The second part that you're going to need if you actually planning on opening your business is your expenses and your business plan. The business plan, it's very important. You actually want to get help from your SBDC representative to assist you with that. The business plan can be 5 pages, it can be 100 pages. It depends on your business. It doesn't have to be too small or too big. What the bank is going to look is for detailed information about your business, something that makes sense, something that you've been planning for a while and then you're going to execute as it is. And to be honest with you, the banks will not read the entire business plan. And like I said, it doesn't matter how small it is or how long it is, we're not going to look into it. But it doesn't mean that we're not going to look into it. We're not going to read it to entirely, but we're not really going to, we're actually going to go back and look into it. The reason why is because if we see in your expenses that you have, marketing expenses for $4,000, we're going to go back into your business plan and see why is it that you need to spend $5,000 in marketing, or why is it you need to spend $14,000 in salaries and wages. So we want to go back into the business plan and say, okay, why exactly is that he's thinking that he needs to pay this much money for marketing or for the expenses. So it's really important that the business plan matches what your expenses, your projection expenses are going to be. So like I said, the banks are there to lend you the money. We actually are willing to provide the money. We just need to make sure that you guys have all the information that we need, the documentation that we need, and that you're well prepared to answer a couple of the questions once the underwriter or the credit analyst gives you a call, just to better understand the information that you turning to us. Let me see. So like I said, in conclusion, the banks really want to lend the money, but we need an applicant that indicates, the information is correct for the information. Hello, can you hear me? Yeah. Okay, so we started this presentation utilizing the information of someone who's already had a tax returns information. So to make that effort to start your business with your own resources, even if it's a small business, it really helps if you have all the information. So if you have any additional questions, I'll be more than happy to answer them after we're done with this. Okay. Also want to let you know that East West Bank offers, we have actually a small access working capital. If you don't have the capital that you need for your business, if you also don't have a collateral, or if you're not ready with your tax returns, our specific program doesn't ask tax returns. We don't require a collateral, and you can borrow up to $25,000. We don't do startups. We do businesses that have been established for 2 years or more. But it's very easy. There's no origination fees, and like I said, the paperwork is really very minimal. I'll send you more information if you have any more questions. If you provide your information to David, I'd be more than glad to forward you a little more detailed information about it. Thank you.
Well, thank you so much, Jezebel. I really appreciate your presentation. Why don't we go ahead and open it up to questions? If you have any questions for us, please go ahead and type that into the chat box below. If anyone is having any access to any issues with access, please, I'll briefly unmute anyone that would like to ask a question. But let's go ahead and start with a couple of questions here that we've gotten. The first one being, let me see here. Let's see. The first one is, why do banks have different requirements if it is the same loan?
Okay, why do banks have different requirements if it's the same loan? Well, basically what I was telling you that is not every single bank has the same guidelines in regards to what they want to utilize to provide the credit. Each bank takes different risks, and that's what they have the risk management department, and that's where they analyze what risks is the bank willing to take for those clients. And part of it is what I was also telling you, the FICO score. Not every single bank has the same requirement when it comes to the FICO score that they're looking into for their clients.
Okay. Thank you, Jezebel. The next question I have here comes from, and I apologize for if I pronounce this incorrectly, Chethan Bodula. Her question is, what are options for a startup business for a loan or credit line? For instance, East West Bank won't do startup loans, if I understand correctly.
You're right. East West Bank is not currently participating for startups. But the options that you have, like I said, primarily is get in contact with you SBDC department, your local SBDC. In this case, will be the Orange County. Just because we don't help startups, it doesn't mean that they cannot get you ready for next year. Basically, for some of the banks, all it takes is 1 year of experience. What I was telling you about this lady that started her own beauty salon, it only took 1 year of her reporting her taxes the right way, getting the proper documentation that she needed. And in 1 year, she was able to get a loan with the bank.
Thank you. And the next question comes from Joshua Brown. What are the main differences between SBA business loans and conventional bank loans? For example, will bankruptcy discharge an SBA loan?
I'm sorry, I didn't hear the last part.
For example, will bankruptcy discharge an SBA loan? I think he meant disqualify you from an SBA loan.
Yeah, great. Not necessarily. Like I said, SBA has their also different guidelines. The difference between an SBA loan to a conventional loan is the SBA generally, their interest rates are a lot lower. Also, the SBA guarantees the loan. Like I said, giving a loan to a small business is a risk that the bank will take, because really the bank doesn't know if, let's say that you've been in business for 2 years. We really don't know if your business is going to continue growing. Well, we do have documents, that will kind of give us an idea. But just in case your business doesn't grow, and for whatever reason it defaults on the loan, the SBA, the Small Business Administration, guarantees in some cases up to 85% of the loan. So, so it's defaulted. The conventional lending is when you have your own collateral, you proving that, your taxes returns prove a lot of income, and you have the ability to pay the loan on your own. So the risk is a lot less. And that's, I don't know if I answered the question, but that is the difference between an SBA loan and a conventional loan. It's the guarantee that the SBA is giving us.
Thank you, Jezebel. Joshua, please let us know if we didn't answer your question fully. And the next question comes from Kyle Baltz. If we are starting up fresh with 0 years in business, how do we best position ourselves for a loan?
Okay, like I was telling you earlier, you have to make sure that you have capital on your own. It's very important that you have, let me move into, I can go into the, can go into that page. It's very important that you also have some of your own capital to start the business. As far as I know right now, there's no, at least East West Bank, no 100% financing for a new business. The best way you can position yourself is if you have your business plan in order. Like I said, get assistance from your SBDC representative to assist you with your business plan. Make sure that you have your projections, your working capital projections in order. Whatever you're going to need for your furniture, your fixtures. But the key definitely is going to be how much money down do you have for your own business. You have to come up with your own money out of your pocket, at least 30% to put down to start your business. So if you have your proper documentation, you've been in the industry for a while, and you have your 30%, at least 30% down to open your own business, you're doing a great job to position yourself for a lot of the banks to actually want to finance you.
Thank you, Jezebel. My understanding is that SBA loans take a very long time. Why is that, and what is the interest rate on a typical SBA loan?
Okay, the reason SBA loans take a little bit long is, again, it's not only the bank's policies and procedures and guidelines that we have to follow. We also have to follow the guidelines of the SBA administration. And so they are the ones guaranteeing the loan. Their guidelines are a little bit more strict. So it takes a little bit longer if the client doesn't have all their documentation in order, because we keep on going back and forward, trying to get the information that we need to satisfy the guidelines for the SBA. Again, if they're going to guarantee your loan up to 85% in some cases, they want to make sure that you've done your homework, that you have experience in the business, that you are reporting everything that you need to report on your tax return. So the guidelines are a little bit more strict. So it's an extra step that we have to do to get this SBA loan approved. That's the reason why it takes a little bit longer than other ones. And the SBA interest rate across right now is 7%, and it's an SBA lending. So for the most part, it's pretty much the same rate that you will get anywhere. It's just the extra regulations or guidelines that each bank has in place to take the risk.
Now we have 3 more questions from Chetan. And the first one is, for a startup business having a hard time getting a loan and then turning to friends and family for a business loan, can I offer to family to pay them back with 15% or 20% interest? I heard something about usury laws in California that says 10% is max interest for friends and family. Is that true?
I'm not familiar with the interest that you can pay your friends and family. The friends and family lending, I mean, for the most part, it's something that they negotiate individually because they're doing it as your friends and family, not aware of any specific regulations, but I can definitely find out about that. I know you can get money from your friends and family because I've done it myself, but I don't remember the interest being high or any at all. But again, that's different, friends and family. So, but I can definitely look into it, and I'll get back to you.
Okay. And the next question is, I've just begun looking into SBA 7A loans. Do you know which ones are available for startups?
7-8 loans available for startups?
Yes.
Sorry, I was getting a text. And 7-8 loans available for startups. We don't, not, East West Bank right now doesn't offer 7(a) loans available for startups. You got to be in business for at least 2 years to be able to qualify for a 7(a) loan. So not necessarily for startups. And also you need to have at least 30% to put down for your business. And also it has to do with, what kind of business are thinking and acquiring, but not right now with the 7(a) loan for East West Bank.
Okay. And the final question is actually one that's primarily for me. Who at the SBDC is a good contact person for follow-up questions on business loan credit line for startups? Well, we have a number of consultants here that are available to work with you. What I would recommend anyone that's looking to get assistance with getting a loan or getting themselves prepared to submit documentation for a business loan, what I would recommend is that you call us at the number that's shown on the screen right now, the 714-564-5200. And you will be able to speak to me directly, and we can talk about what your options are. We have a number of consultants here. We have John, Manal, Katie. They are all consultants that have years and years of experience with working with small business owners that are seeking loans to either expand or start their business. We'll go through the whole process with you of looking at your financial situation. What are your goals with your business? And helping you understand what the next steps are. What are some of the documentation that loans are typically banks are typically looking for, and a variety of different options in terms of ways that you can get access to the capital that you're seeking for your business. So the first step is really just giving us a call, sharing, and for us to really have a clear understanding of what your business goals are, what you're doing as a business, and and so that we can really put you in with the right person and the right that can assist you with the loan that you're seeking. So that would be the quick answer for that. The next question, it comes from Tara. She says, I'm confused. People are talking about an SBA loan, but my understanding is that the SBA doesn't actually lend any money. It only guarantees the loan. The institution, organization, bank gives you the loan and charges you the interest rate, etc. Is this correct, Jezebel? Jezebel?
Yes, yeah, I'm here. Sorry, I was muted. Yes, you are correct. The SBA guarantees the loan. It's the bank that is actually giving you the loan, guaranteed by the SBA. And that's what I was telling you, that if for whatever reason you default on the loan, the SBA guarantees at least 50% to the bank of the money that it was lent to you.
Okay. Okay, great. Well, I think that just about wraps up the questions that we have. If there is anyone that is looking to get, has any questions, please just quickly mention it in the text feature there. Otherwise, I do want to encourage all of you to please connect with us. We are available for appointments, and we do provide services that go beyond just assisting you with loans. We have consultants that have experience with developing business plans, developing marketing strategies. If you're looking to get your business online, we have experts in that field as well, developing websites, providing guidance with your social media strategy. We have individuals that have years of experience in working with business owners. They have their own businesses that they actively run, and so they are familiar with some of the challenges of owning a business. And so we really want to encourage you to use us as a resource. Most of our services are at no cost to you. They are a service that's provided to you because of your tax dollars. And we have, for those of you that are not in Orange County, there are a number of SBDC centers around the country, well over 1,000 actually. And so they are geared towards helping each of you with your businesses. So please reach out to us. You can even call us if you're looking for one that's a little closer to you. If you're not in Orange County, just give us a call and we'll assist you with finding your local SBDC. So I just want to take a moment. If there are any more questions, please put it in the text. Otherwise, thank you so much, everyone, for attending. Jezebel, thank you so much for taking the time out of your day to share with us all your expertise and your years of experience in the banking industry. And once again, this is part one of our Access to Capital webinar. And so I do want to encourage all of you to seek out the next webinar that will be happening next week, and that it'll be occurring at the same time. And all you have to do is just register for the event, and you'll be good to go. It'll be Wednesday, October 25th at 9 a.m. And the focus of that workshop will be on understanding your financial statements. So it'll be a wonderful webinar that's going to be led by Jose Made of Acción. So definitely want to tune in. And if you have any questions, please feel free to contact us. And once again, thank you very much, Jezebel. If you'd like to say a few parting words, thank you once again. Jezebel?
Sorry, my phone keeps on muting. Oh, no, like I said, I just want to say thank you. I want to thank everybody for making the time to be on the webinar. It's important to get information to grow your business.
Thank you, Jezebel. And I do have one last question. It's in regards to the workshop that's happening tonight. We do have a workshop here in Santa Ana at our building in right off the 5 freeway, Rancho Santiago Community College District. And the workshop for tonight is actually called Why Your Website Should Be Your Top Priority. So please go to our website, ocsbdc.org. And under trainings, you'll find a link so that you can register. It's a wonderful resource, so please, I encourage you to join us tonight if you are able to. It starts at 6 p.m. And with that, I thank all of you for attending, and you all have a wonderful day, and look forward to seeing you next week. And thank you so much, Jezebel.